The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. And let me just double check something. Okay. Yes. Hi everyone. Great 2 hours we just had. 9 o'clock. Steve Rhodes kicks us off with a fabulous show. Then he's joined by Tom O'Brien. Two together are just fabulous. Just give you a lot of information. I come in here at 11 o'clock till 12. Then I'm followed by Larry Pesavento. Larry Pesavento, unfortunately, is not feeling too well today. I said I would sit in and do the show, so I'm here for 2 hours. It gives me a little time to go through a number of the commodities I'd like to look at probably in the next hour. And this is a very interesting time. Why? Because it's the end of the month. We've got the whole day to go, and that closes out April. April so far has been a pretty darn good month. Most importantly, as far as I'm concerned, let me just double check here for 1 second. So last month we made a high of 13,289.08. This month we went to 13,297.11. Good. So that means we've extended in April, regardless of how we close today. In the Dow monthly chart, I'm being very conservative. I'm calling this leg E. Why? Because we made a peak D in the ChapmanWave. Let me just quickly go through, because we always have many new listeners. I have a very, I'd like to call it a simple doesn't mean easy, but the actual methodology is really simple. I try to identify the lowest, most obvious low bar, and from that low bar, each successively higher peak is named with an uppercase letter, A, peak, and I call them leg A until it makes a peak. Then it's called peak A. If it goes 1 penny above peak A, without breaking the beginning bar, that low bar, it starts leg B. You can actually get within that A, you can get a pullback and then start a little A and then make a little B, and then you break out, and that'll start leg C. Because I like to be as conservative as possible. Whoops, I must probably went one step too many there. Well, let's do this. If you're looking at the charts, if you're looking at Tiger TV, you'll be able to see something very clearly. I'm going to stretch this out. That is the monthly chart. And you'll see that the low of 64.69 back in March of 2009, that started a leg A, which went to 10,729, up 65%, pull back just for one bar. The moment it broke above 10,729.90 by 1 penny, 1 penny, that's like a thousandth, right? It goes to leg B. Leg B went to 11,258, up 69%, pulls back to 9,614. It forms another pattern. Now, that particular pattern is a pattern in the ChapmanWave methodology I've developed. I can't actually enumerate how many techniques there are, but there are well over 2 dozen different techniques. The one technique that is absolutely unique to the ChapmanWave is a pattern that I call the stalk leg formation. What does that mean? It means that you go up in a straight leg. It doesn't have to be peak A, peak B. It's just a continuous up move. And then the price stalls and makes what I call an oval formation. Slightly higher highs, slightly lower lows, but not a rectangle. It's all expanding. It's actually like a diamond pattern almost. Well, that creates the body. When you break that body, the high, that starts a leg up that I call the neck. Now, that can extend into what I call a propeller shaft A to B, C to D pattern. That's where it coincides very much with what Larry talks about, Tom talks about, Steve talks about. Those are the patterns that you would be looking for. Well, lo and behold, it breaks 11,258, and it goes right on to 12,391, up 91% to peak C. Just a minor pullback. That's part of the neck. Then it pulls back from February of 2011, pulls back for one bar, and then it breaks that high and starts to go to leg D up, which is at 12,876, up 99%. That's cool. Now it forms the head. That head then forms the beak. That's the pattern that really brought me to this whole thing of the stalk leg. Why? Because you get one leg, You know how a stork has this wide, long body, and you don't know how in the wind it's just managing to stand there just beautifully on this thin, spindly little leg. That's kind of what we're looking at. And then it makes the neck. That's the stork has its long neck. Then it has the long beak, and that beak can take you to where the moment it breaks the arch, the body high of 11,258, you can go deep into the body, which it does. It goes to 10,404, 800 points above. 800 points above the 96,114 level, and that's the low of that particular pattern in the body. And then what does it do? It breaks out, walks the 9-period exponential moving average, and goes to this latest high of 13,297. I have to call that leg B. Essentially, I could call it E/A. But give me a break after all this to start a brand new buy mode that has to go for another year at least. If this is new leg A, no, at least another 8 months. I cannot do that. I have to call it leg E, which can go to an F. And even more important, the last peak was an F of October 2007 at 14,198. So this is kind of important for me in that we made a new high. I don't care where we closed today, we've made this high. But I do care that if the Dow is down at the end, if the S&P and the Dow are down very sharply, first of all, I would expect the weekly chart is that same pattern that I was talking about back in 2010, that oval body. Well, this is exactly what's happening here in the weekly chart. Peak D at 13,297. Oval body takes you down to the low of 12,710. And now we're attempting to try this week to make a new high. Why do I say that? Because the daily, remember the pattern that I spoke about? Peak A, peak B, peak C, peak D, just as you see in the weekly chart. Look at this. If you're looking at Tiger TV, you'll see that we made a trough at 12,719. We went to peak A at 12,986.95 on the 12th of April. Pulled back, broke above it to leg B on the 17th at 13,131.36. Pulled back. Now we've got leg C from Friday going to 13,266.68. Normally, you would expect, especially with the MACD at 88% and the stochastic expanding, a new recovery high to take you to leg D. Now, here's the big difference. When you are under a previous high of importance, that's 13,297, that's the high of the 2nd of April, you can fail below it. If we were at new recovery highs, I'd say, no, C is absolutely going to go to D. Here I've got to be just a tad careful. And that's just to say, I believe that we should make within another 2 days, by Wednesday afternoon, we should be attempting to make a higher high above 13,267. And if it's strongly higher, we will tackle the 13,297 high of the 2nd of April. So I hope I've clarified some of that. If you're looking at the charts, it's so much easier than just listening to this preamble. So I'd love if you can look at the Tiger TV. It'll be archived on Tiger TV 11. Right now it's Tiger TV 1. Well, let's go to our first caller. We've got Gary in Tampa. I'm sorry, Gary, I just didn't swing left quick enough. Gary wanted to know about JPM. I want to look at JPM for 2 reasons. JP Morgan had been a stellar performer in the XLF. That is the financial S&P Select Financial Index. So I'm going to do this. I'm going to first of all tell you that it made a peak E top in the ChapmanWave right at that little doji. That's an evening star right there on the 27th of April at 46.49, and it's pulled back from that level to a low of 41.80 on the 23rd of April. Tried to run up. It went to the 43.99 level and is now pulling back a little bit. The stochastic's not very good and the MACD is not very good. So I'm going to do this. I'm going to show you the weekly chart, and that weekly chart says it went to peak C. I want to just double check. Everything about it looks like it should be. No, it went to peak C, and it retested the previous high in a left side, right side price time match that goes to the week of May the 6th. It's now pulled back. I suspect it should still try at some point in the next 2 weeks. If it doesn't break, it's 42.97. If it doesn't break 40.65, the 20-period moving average in the weekly chart, but instead in the next 3 days can climb above 43.99, that'll say, yep, it can go to leg D, and I'll put it together with the XLF. I do want to do this just for the moment because I like to do this. The Dow's down 30 at 13,194. The S&P is down 7 at 1396. The comp index is down deeper. It's down 17 at 3,051. You've got gold down 450 at 1660. Silver's down 58 cents at 30.76. Platinum's down 163 at 1570. And high-grade copper, in Larry's show, I'm going to go through these commodities in great detail, even though it's really Thursday that he does all the commodities. I'll use that particular time period to do that. I will look at some other things in the meantime, if there's a moment in between now and 12 o'clock. And you've got high-grade copper at 383 is up 1, because that's really important. I want to look at high-grade copper. It's held very well. It's had a very nice move to the upside. And crude oil is down 66 cents at 104.27. And you've got bonds up 7/30 seconds at 142.30. You know, the TLT has held really well. It's not breaking out to the upside. And it's telling me that within the backdrop that we're looking at, money is still going into what I would call, the traditionalists call it the safety of bonds. Right now, I'm just going to say it's rotating from what people perceive as an unsafe haven in the stock market to somewhat safe haven of T-bonds at this particular point. Now let's go back to the JP Morgan. I'll put it together with the XLF because it really is, this is part actually what I wanted to talk about today. The XLF is a lovely move off the recent low. The XLF is the S&P Select Financial Spider Fund, and it's trading at 15.41, down 11 cents. Now, this is really important. There was a gap from the March 12th high of 14.90 to the next day's low, the 13th, of 14.95, just 5 cents. But look what happened. On last Monday, I believe it was Monday, on the 23rd of April, the XLF went down to 14.92, missed by 1 penny filling the gap, but it did get into the gap, and then it ran up. And the rule of the ChapmanWave dreaded H, this arch formation. Let me just draw it for you so you can see. You know, we love to be an educational body here at TFNN. So when you went to the 1601 and 1599 double top, peak C1, C2, back on the 2nd of April, at 1599, it plunged down to 1495, bounced, and then arched over, and it came back to the 1491 level. It broke it and then closed above it. There's a rule of thumb that I talk about in the dreaded H formation, and that's really important. I'll be back. Basil Chapman, 877-927-6648.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, and this is the Tiger Technicians Hour. Dow's down 27, S&P's down 6. Dow's a little stronger than the S&P. Now, we've got a couple of people. So we've got Gary from Tampa wondering about JP Morgan. We're doing that via the JP Morgan itself, plus the XLF, which has been the Spider Select Financials ETF, which has been holding really well. We've also got Bill, who sent me an email about Lulu. I'm writing this down, and TJ in the den wants to know about XLE. Great, that's the energy. So it all ties together, because this is a very important period for a number of the indices. So let's just go back. So I wrote that down because I need to keep looking down to see that that's what I need to answer. Those are the questions. Now let's go back to the XLF. In the XLF, there's a pattern that I talk about, which is an H formation. In my CD introducing the ChapmanWave methodology, I go into it in great detail about what happens with the dreaded H. I call it the dreaded H because it used to be that everybody was wanting to be a bull, but when the left side broke on this H pattern, it went even lower, and that's why I nicknamed it dreaded H, but it looks like a lowercase h, not a capital, but a lowercase h. So now what's important about this, and I'm going to show it in a number of charts, is that the XLE went below the previous low of 1491. On the 23rd, it went to 1492. That says, in the ChapmanWave methodology, that unless the technicals improve dramatically, all that you can expect is that there's a rally to and maybe just above the previous arch high, and then it has to come back to do some retesting. Doesn't have to come back all the way, but it could form. If it breaks after that and breaks about 50%, you've started an M pattern. The H, the lowercase h, goes to a soft M, rounding M formation, M for mother. So now what we did is we ran up, And yes, it took out the previous high of 1551, closed above it at 15.1. It didn't close above it on Thursday, but on Friday it closed at 1552. That says that's very good action, because the stochastic ran from being negative, and there's a beautiful divergence between the slow stochastic lows around about the 9th, 10th, and on the 23rd, 24th, as it was higher, as the price came down to a lower low. So that says you've got to be somewhat careful. Why? Because this could extend up even higher, because you've got the MACD just starting to cross positive. Okay, that's the first step. But you have to wait. Each day, looking at a daily bar, you have to wait for the end of the day. If by the end of the day, the XLF turns, which is at 1541 down 11 cents, starts to break and goes underneath 1532, that's the low of the 26th, be careful, because that whole wick of the 25th down to 1524 becomes a target. Number one. Number two is, if it holds really well here, this is a very select sell-off, because I've called this a rotational correction that we're undergoing. The great winners are under pressure, like Apple, and I spoke about those around numbers. I don't know if we'll have a chance to go into it. And the laggards are starting to show some strength, and a lot of small double-digit stocks in the teens and single-digit are trying to hold here and become focal points for a catch-up phase. So here we go. Now, if you're looking at the monthly chart, the weekly chart, you're making a cup with a potential handle. One of my least favorite techniques, technical formations. Why? Because very often it can break down and the handle just drops quickly. Or it only goes modestly high and then comes back deeply into the cup. But that says that if the XLF in May is able to cross 1601, the high of the week of the 30th of March, then 16.62 is the 200 period exponential moving average, which it hasn't been able to get even close to since it broke down back in, since it broke down back in the week of the 2nd of November 2007. So this is very important. Just nice strength building. In fact, it looks like an inverted head and shoulders pattern. Got to get Rick from British Columbia to look at that. All right. Now, the monthly chart is just in a brand new leg A. I'm calling this A, but the moment it touches 1721, 1 penny above the high of February of last year, I call it, if it's this leg, I'll call it E. If it's the next leg, I'll call it F/B. Because I want to be as conservative as possible, because I need to see the stochastic at 60% in the monthly go to 80% and holding for it to really sustain a move to the upside. So that's that. Now, so let's just quickly go to JP Morgan. And JP Morgan at this particular point is trading, and then I'm going to go to the other. Oh no, a break already? All right, JP Morgan is trading at 43.02, down 33 cents. And the question, I'm sure, is either what should I do because I've got it, or where should I buy it? And I'll give you that answer as soon as we get back. Then we'll go to Lulu email, and we'll go for TJ to XLE. Basil Chapman, I'm going to be here for 2 hours. I'll do Larry's program as well.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now,
yeah.
Did you sell us jewelry, or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. So let's just finish up this JP Morgan chart here. Dow's down 36, S&P's down 7. There's a lot of, every time there's a rally, sellers come in. Every time there's selling, buyers come in. And that's what you expect at the end of the month. It is time period from 310 to 320 that's going to tell you whether there's a sharp sell-off into the close. And that's what I'd be concerned about. If there's a very sharp sell-off into the close, we can start off April with a lower high, May with a lower high. That's what you got to watch carefully. So here we go. In JP Morgan, if you are long, I would say some part of your position, especially if you got it long last week, some part of your position should have a stop absolutely below the 4180 low of April the 23rd. I would say no. I would put a stop in at about 43. No, sorry, I didn't mean 43. I mean 42.80. 42.80. Why? Because if it starts to go below the lows of the low of today and the low of the 24th, then that candle from the 23rd will be tested. And the stochastic's only at 50%, and that's not showing strength, that's showing weakness. So I'd be really careful. The weekly chart is still very positive, but once again, if it breaks that, then 40.65 is the 20-period exponential moving average. So I would be careful putting in stops. Where would I add to my position? If by today it doesn't take out 42.80, but instead it closes somewhere around here, or 43 43.05, and by tomorrow it's trying to get into the candle of last week, getting to the 43.50 area. Then I would say, okay, I would consider lowering the stop on some part of my position, and I would add another position to it, and that one would have a very tight 20-cent stop. So at 45.53, I'd add a small position, a trading position, and that one would have a stop of about 25 cents. Because why? By Wednesday, very important day, Wednesday you need to be up and over. So let's do this. So that's JP Morgan. XLF has a better chart pattern. It's acting quite well, and the day is young. Anything can happen. So if the XLF starts to take out the low of Thursday, 1532, then I'm going to say be careful, because you could be starting the M pattern. Now, in the patterns that I'm talking about in my CD introducing the ChapmanWave methodology, only available at TFNN, you will see that if that fails right there, it can go down again and make another one, and then at some point it could start the M pattern, and that M pattern has a whole bunch of criteria. But so far, let's just deal with one thing at a time, and there's weakness intraday, and we've got to monitor this by the end of the day. I'll know a lot more in the next hour, so I'll be here. So now let's go through. So that's it. Now Lulu. Lulu wasn't for Bill. Lulu was for Jason. Emailed me. What about Lulu? Well, Lulu, I have to call this leg. I've gone through the notation umpteen ways. I have to call it peak C that was made the week of the 6th of April. LULU. This is Lululemon Athletica Inc. Unbelievable that a stock like this can climb just to the sky from a low of, in the monthly chart, from a low of $4.33 just a couple of years ago. That's in February of 2009. Oh, no. $2.64 was the low. $2.64. Okay, so it's had a bit of a run. It hit a high of 77.13. I would say that going from 264 to 77 takes you into the kind of oversold area, but it's holding the 9-period exponential moving average. I've got a leg E in the monthly. I'm not calling it E/A, calling it E, and let's see how it deals with E. MACD is good. Stochastics at 91%. Nothing negative there. But the weekly chart is the one that I'm watching closely, because it's holding very well. If the weekly chart by Friday closes under 69.84, it's at 73.76 right now, that'll say you got to be careful, because the MACD will be turning down. Stochastic almost certainly will be under 80%. So far it's not. It's holding the 9-period moving average at 72.64, so that's good. So now let's go to the daily chart. There's that M pattern, the H pattern, that went from the peak F top of 77.13 on the 5th, pulls back sharply, runs up. When candles are made like this, I'm always suspicious. When you get deep candles and you start to see strong red to the downside, it says to me, be careful, because it's becoming more and more vulnerable, even though it keeps bouncing back until it makes a higher high and gets above the doji high of the 18th at 75.33. Got to be a little bit careful. And what I'd said is that in an email that I would, oops, it's not that one, it's this one here. I would see how it holds the 120-minute charts, 9-period exponential moving average between 73.70 and 73.50. So if by tomorrow afternoon or Wednesday, Lululemon, LULU, is, instead of being down in the 72.80 area, it's at the 74.30 or higher, then I'm expecting that it's going to have another run, and that could be a final run in the weekly chart going above 77.13, and then I would say be very careful. Although I won't have a sell signal, I think that at that point the upside will be limited based on a number of factors that say that the apparel area, many stocks are starting to become very overbought. So that's that. Let's go now to, and then Bill wanted to know about VAL. VAL is Val, what is it? I always chart this thing and I always Valspar Core. the Valspar call, and I can't remember what the heck they do, but it's walking the 9-period moving average. This is what I call the snail move. I've got a heading, a title here, where it's called the snail or worm. And it's just an unbelievable thing. I remember Merck doing this back in the 1980s, and then subsequently other charts. They just steadily climb. Every week or every month you say, it's impossible. I cannot buy it here because it's overbought. And every month it makes a new recovery high. In this little narrow move, very little move from the high to the low each month, but every month it goes higher. Well, that's what it's been doing. So there's no sell signal yet. It's at 51.36. VAL is trading at 51.36. What I said is that I see that the stochastics at 84%, but it is in leg D, and I suspect it's going to make a peak D today or tomorrow. I would say it might be today because it's got a lower high from the 52.12 to today's 52.11. Now, I've made a whole thing now. I've done work on this for a long time. It works on the monthly, and I've noticed now it's been working very well on the weekly charts. I don't know yet on the daily. But when a stock makes parallel highs, this one's done 49.96 on the 15th of March, 48.36 on the 16th, and then it pulled back from peak D. Went to peak E, and it went to 50.77. And the next day it went to 50.76, sharp move down. It's just done the same thing. That is another technique that I'm working on, and so far it seems to be giving fairly good results. So I'm going to say to Bill that his question was really about the monthly chart. The weekly chart is going to the daily chart is going to dictate what the weekly does. It's in leg D, possibly peak D in the daily. It's in leg D. And now this is interesting because it's possibly going to be peak D all week. It doesn't break above 52.12, goes to 52.13. If it does that, it extends this. But there's nothing technically wrong in the weekly chart. There are a lot of charts like this. The monthly chart is spectacular. This is what I call a right arm extension. And this right arm extension has gone from 27.44 in August of 2011 straight up without a single peak. And I'm calling this leg D. And so far, I just need to see what they do. The Valspar, let's see, the Valspar group, is it? Yep, core. Okay, Valspar, browsing, global coatings leadership. Okay, I remember, I did write that in, but I lost the chart. So, Valspar core, they are, let me see if I can get a little bit more. Okay, doing our part, your career, environmental progress. Give me what you do, man. Global coating leadership. All right, global coating leadership. So that is very important. And what is it? Why is it important? It says that in this particular chart, if in fact the daily is going to start a sell-off, it needs to start a sell-off by taking out, it's at 51.35, taking out 50.35 in the next week and a half. If it does that, that'll impact the weekly because 49.44 is the key support. So far that's not happening, but there's a chance that it might. Peak D, daily peak D, there's a hat trick top, peak D weekly, and a potential peak D in Valspar monthly. If this month, the month of May, there is no new high above 52.12. So far, no sell signals at all, except possibly coming in the daily in the next day or two. So that's that. XLE, let's go on. We got the question in the den. XLE, Francis, Valspar, yeah, paints and coatings. Yeah, I remember writing it down. I don't know why it wasn't on my chart. Great. Thank you, Dan. What a wonderful medium we've got here. Manufactures coatings, paints, and specialty polymers for the do-it-yourself, automotive, industrial, and OEM market. Oh, okay. I could still go higher. I don't see why not. Now, XLE, S&P Select Energy Spider, made a high at 80.97 in March of 2011. The next month, 80.90, 7 cents less. The next month, 80.80. That's in monthly charts. It kept making fractional new lows. Higher lows. Lower highs. Yeah, lower highs. And now look what happens. It plunges down to 54. Oh, I must make a note of that. I'm not going to let this go by. So that's going to be 2 parallel high bars. and that's going to be XLE, and that's at 80.97. All right, got it down. Now that says the monthly chart had a spectacular run, having dropped 26 points from 80.97 down to 54.28, and then it runs up. That's not leg A, that's leg A, and then peak A. The bar that makes the low bar can also be the high bar, except in a ChapmanWave instant restart. Eyes glaze over. Let's see. 76.50 was the high in February of 2012, and now it's pulled back. It's just under the 9-period exponential moving average with a couple of hours to go for the rest of the day. The weekly went to a peak B and has not closed over the 9-period exponential moving average of 71.08. It's at 70.67, but it's close. It's trying to hug that line. It's trying to test that line. That's a positive. And now, here we go. You remember the chart? Tell me if this doesn't look the same. Look, there's the chart of the dreaded H pattern. This is Sears and Roebuck, Sears Holdings, back in 2005, June. That's when I did the chart. And that goes all the way from the top down with all these H's that turn into the H pattern, and then an M pattern. Now look what's happened. You've gone H, and now you've got the M pattern with lower lows. That says you can break out, and only if the technicals really rally strongly. But look at the divergence between the stochastic and the daily chart and the lower lows in the weekly chart. And that says, in the daily chart, that says that there's a chance that if it breaks above the previous arch high of 70.12, it could go even higher into a brand new buy mode. Well, it's gone to leg A, and it stopped above the 200-period moving average, just below the 50-period moving average, and it's not a bad candle so far today. Down 12 cents at 70.68, and I've got the potential for a squash in the stochastic and MACD pattern. So I like this very much. I'm going to see in the next 2 days whether or not the XLE, the energy sector spider, is able to either not break 70.44, the low of the 27th, or to test the upper part of this candle by Tuesday afternoon, Wednesday afternoon, somewhere in the 70.85. If it does that, I suspect the leg B is going to go, and all we can do is go step by step, because the weekly technicals are really not good at all, and neither is the monthly. So this means that this daily is going to have to help a major tide. That usually doesn't happen. So I suspect that what I'm looking at is that the XLE on an upside basis could go to 71.49, the high of the 5th of April, and then it might stall. We're going to have to watch that really closely. So I hope I covered that. Now we had one other question. Am I correct? No more questions in the den. Okay, so that leads me to do this. Now I can go through something else. The IYC, this is really, for me, a very important index, an ETF. The IYC is the iShares Dow Jones U.S. Consumer Cyclical Sector. Do you know that it went to an all-time high? And this thing goes back to July of 2000. Yeah, July of 2000. An all-time high, above the high of 72.42 back in June of 2007, having been cut in half to 32.79 in 2008 and retested in 2009. I'll go through this when we get back. It's a very important ETF. Basil Chapman, Dow's down 35, S&P's down 7. Be right back. 877-927-6648.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an an invaluable tool to help me analyze the potential of the market each day. It gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi everyone, Basil Chapman. A couple of little things here I want to go through. First of all, I must just write this down because I'm going to forget. So it's NGM, it's $1. Okay, in the chart that I was looking at of VEL, the VEL, whatever it is, the Valspar Corporation, what I was looking at is the monthly chart, and I forgot to mention that for Buller was doing it. I'm not sure if he got the instant restart, and that ChapmanWave instant restart, when the low of November at 14.47 of 2008 came in, there was a retest, a successful retest, and that. So I counted that there's an A, then it goes B, C, and then peak D in January of 2010, 28.79. And then it holds the 9-period moving average, and within 1 bar, within 2 bars, it breaks to a new recovery high. That made it parallel E or A, F or B, and then the doji high of the April of 2011, G or C. If you do that, and so many charts have done this, the instant restart in the monthly chart is a very powerful thing. It doesn't happen that often, but it's been happening in the last 6 months. That says that this is probably leg D. And that's the count that I'm going with, because after G, you can't get H. There's no H in the Chapman wave. So it goes to a new leg D. So I wanted to cover that. Then the question I had in the den was, I got a question. Oh, I got a caller. I'm sorry. I got a caller, and the callers always get preeminence here. Joyce in Clearwater. Hi, Joyce. How are you?
I'm doing fine, thanks. I wanted to look at Shuffle Master. What do you think of it?
Oh, Shuffle Master. You know, Shuffle Master is really a funny stock. If you forget to look at it, it has these incredible moves, and you say, oh, no. And then the moment you want to buy it, it just drops really quickly. So the Shuffle Master is SHFL, trading at $7.73, a whopping leg D in the monthly chart with a potential doji at the end of the day. But this is a wide candle doji. That says to me, even if the price goes higher, it's going to come and test 1773. Even if the price goes lower, there's going to be one bounce that takes it back to 1773. Now in the weekly chart, I've got it at peak D. Right, this particular moment. Do you have this?
No, I'm just looking to buy it.
Oh, you're looking to buy it. All right. Looking to buy it. Give me a second. I need to look at the date a little bit close. You know, this is a parabolic move in the weekly. No, it's a parabolic move, not so much in time, but in price. Usually in time, you get bars and bars and bars that go higher. So this is what I'm going to suggest to you. I would not buy it right now. It's at 17.73 unless I treated it as a trade. Are you prepared to treat this as a trade that might work, but you need to stop? Okay. Then I'm going to make the suggestion that says this. Start a tiny portion at 1773 right now, but the stop on this one can be under the 9-period moving average of 1710. It's not bad. It's 60 cents. I don't think that's a big deal. For small position at 60. Nah. Now, I'll tell you why. Because this is leg B. Probably peak B. If this accelerates, it should not only go to the last high of peak F at $18.77, which is 1 point, which is very nice, because all you need to do is to raise your stop. But I would do this. If it clears $18.37 by Wednesday, add another small position. Your first small position absolutely cannot take a loss. It doesn't need to. In fact, it should even take a profit. This position, though, is going to have a trading stop. If it closes above 18, if it breaks above 1837, make your stop 35 to 40 cents and just keep it as a trading stop. If it breaks 1877, I would either take that off or tighten the stop a lot as it breaks it. And I'm going to be doing Larry's show in the next hour. I might even have another look at it, but that's my trading plan for now. Hope that helps you, Joyce.
Yeah, I did. Thank you very much. Appreciate it.
Thank you very much. I'll be back for Larry's hour. Basil Chapman.
Are you looking for